What if I could show you a blueprint that's being used by 300,000 businesses to generate the highest quality customers they've ever had? And in the last month alone, I've used this strategy to help my own clients add over $100,000 in net new revenue alone and generate over 10 qualified leads per client. Now, each one of those leads was data rich. We could see exactly what they wanted, what problems they were facing, what they've already tried, and what frustrations they have in their process. In fact, we have an average of 10 data points across all of the leads that we generated on average. So it's an incredible strategy that works, and it's working across all different B2B, from B2B SaaS, professional services, consulting. Now, business is really across the whole spectrum, and it's working consistently. Now, before I dive into it, if you don't know me, my name is Isaac Wood. I'm the founder of levergrowth.io. Over the last 5 years, I've helped generate over 1,000 qualified sales opportunities for my clients across B2B using our go-to-market engineering strategies. So essentially, I've tried all sorts of things to get marketing results, to get sales results, and sales teams actually working together to close net new business. And a few years ago, I discovered this blueprint, and it's working incredibly well for me, my business, and my clients. So that's why today I'm sharing it with you. And after watching this video, you'll have a complete blueprint to create your own go-to-market engine that will attract your highest quality client on autopilot. Now let's dig into it. In today's video, we're gonna do a go-to-market plan live build. So what we'll want to ultimately break down are these core 5 metrics, right? The market, the problem set, the positioning, the competition, and the value prop. So to do this, I'm going to go and select a company, and then we'll do it live. I'm gonna be using AI deep research. I'm gonna be walking through some prompts that I use to basically just get this research done for my clients, right? You can get a more accurate output with actual customer insights, with actual insights from your sales conversations. But if you don't have that, that's fine. You can still build out quite a robust go-to-market plan without talking to anybody. So let's go and get into it. So the first thing we want to do is select a company that we want to be building our go-to-market plan for, right? So say you're a private equity firm. So this is an example. They're called Vista Equity Partners. They work with a lot of enterprise and software businesses. So let's actually go and find a company in their portfolio. So if we scroll down, let's go for an industry. They got sales and marketing here. Let's go United States, say West Coast. So you have some pretty big, well-known businesses. So we have unified intelligence to unlock revenue potential. All right, pretty solid. They have a huge list of customers on their page. They have a lot of social proof. This looks pretty good. So let's use exactly as our company that we'll want to do. So let's go down here. Now we'll want to do some research on the market. All right, so we're going to go into Perplexity. I am paying for their $20 a month plan. And so we're going to be using deep research. OpenAI recently released deep research as well, but it's $200 a month at this point, and this is $20. So we're just going to go with this. So I want to understand a few things about this company, and I want to grab their domain to do some research. So let's prompt it. You're a go-to-market engineer and expert. I need you to help me build a go-to-market plan. This starts with understanding the market. Here's the company I want you to analyze. Just give it the domain, and then let's have it go. So this will take some time. Down here, it'll tell you kind of the status of what's going on, and it'll start to reference how many sources it's been going through. So this is really cool. And then, if you want, you can even just click into some of the references and the sources, and you say, all right, cool. So this company specifically is suggesting 87% of sales teams struggle to meet or exceed quotas, right? So it'll basically take all of this data from a web crawl, consolidate it, and give us a result. And some of the questions that I'm asking in the prompt are to define the what, right? So the first thing we need to do is define what is the market we are actually serving, what is the most important, urgent, and frequent problem we're solving. We want to define the why, right? So what are the big problems today that are driving this market? What are the big macro trends impacting this market? What are the changes in the landscape impacting this problem? And why does the market even exist in the first place? So the benefit of understanding your market and in other words, like what is the market and why does it exist? In short, you want to just know that you're in a market that's growing, right? If you're in a market that's dying, you're going to have to be working doubly or more as hard to get the result, right? So if you're growing at a 2% rate and your market is growing and doubling every year, that basically means that you only need to grow at a 2% rate to actually get 4% growth, right? You can apply that 50% to 100%. If your market is declining by 50%, if you're only growing at a 2% rate, that actually means you're going down by 1% every single year, right? So your market is just one of the biggest levers in terms of your overall business success, outside of, founder success and product alignment to the market. You really just need a market that's growing, right? So now we can see the research that we've done. It completed it. It looked through 32 sources, which is pretty substantial, right? In just like 2 minutes of time, right? So let's quickly go through this and kind of see what's going on, right? So exactly, they operate at the intersection of sales, performance, compensation management, and revenue intelligence. They address critical challenges. This is an analysis examining their marketing positioning involving landscape. All right, cool. So this is the what for the market, right? Interconnected segments, sales, compensation management, sales planning and territory, revenue forecasting, sales performance. So basically what it's telling us is, as evidenced by the widespread adoption of AI-driven tools, it's a substantial and growing market. 64% of respondents in a survey by the company are using technologies to forecast their sales trends and personalized compensation structures, right? So the problem that they're actually solving here is 87% of sales teams are struggling to meet or exceed their quota targets, which indicates challenges, right? So challenges around how companies structure, how they communicate, and how they manage their sales incentives. And so like this is sharing, all right, this is a little more detail on the actual problem, right? So what we're seeing here specifically is compensation, complexity, misalignment, inaccurate sales forecasting, inefficient territory planning, and limited revenue intelligence. All right, so very good, right? 53% of sales teams cite macroeconomic challenges as major barriers to hitting targets, requiring a more sophisticated approach to compensation management. So these are all really good data points that we can lean on to say, all right, we're on the right track. Obviously, this business is pretty well established, but you can do the same kind of research for your business, no matter the size, whether you're a startup with 0 employees and you're the solo founder, or you're a massive leader in your particular vertical, right? So now let's talk about the why of the market. So we have a couple things here. We have economic uncertainty and volatility, which is sharing something like 62% of respondents shift towards performance-based pay structures so they can give more cost control while still incentivizing those people who are performing really well. Obviously, this is impacting talent retention. So 86% of reps are saying that compensation is their top priority when job hunting. Makes sense. Salespeople, they want to make more money, right? Manual process and inefficiencies. This is something that is across every single industry and vertical, manual process. So that's basically why software exists, is to automate manual process inefficiencies. And then the last one here, quota setting and attainment disconnect. So basically it's sharing 91% of companies don't expect their account executives to meet their quota or uncertain about them hitting their quota. So basically what that means is most companies are setting a quota and basically saying, we don't expect anybody to actually hit these numbers anyway. Businesses that have quotas are typically, the revenue or the growth is built and backed into by the quotas from the sales folks. So what that means is if your sales team has a quota and your growth rate is based on that quota, if you expect nobody to actually hit those numbers, then your growth rate is completely made up and you're going to be swimming in the dark, right? So let's talk about some macro trends, right? AI, automation adoption. Obviously, everybody's using AI now. Automation is just becoming super standardized, with RPA tools like Zapier, or even like agent builders like N8N now. These are just really changing efficiencies in all different types of throughout the business structure, right? So let's talk about the other ones here. So we have the individual to team-based compensation evolution. So they're moving away from purely individual incentives, and they're moving more towards a team-based compensation model. That's actually interesting because I'm actually seeing a lot of posts and data on LinkedIn around companies that are requiring teams to go all in on sales, right? So it's not just one lone wolf salesperson. It's often a salesperson and a sales engineer, some other folks involved. So they're aligning the incentive based on, the meritocracy of how helpful are you in the sales process, and how important are you to actually getting that revenue in the door, right? And that's not just a super simple, easy thing to know off the top, right? So let's talk about some other ones. We have subscription economy impact, right? This is blowing up all business models like Netflix and HBO Max are crushing the standard like movie model. That's just like one basic example. There's subscription for everything from, boxes to medicine now, right? More compensation granularity and shift from growth at all costs to sustainable revenue, right? So those are all like the big macro trends that are shaping the landscape. And so in terms of like, why does this market actually exist? It's critically important to the business. It's complex beyond standard manual capabilities. You need to be able to leverage data in order to make these good decisions. There's multiple functions within the business that need to be aligned in order for these compensation structures to be correct. And more talent, a global talent force increases competition. And so it makes it really challenging to not only just attract and acquire high quality talent, but also keep them on. So this is really important for the best businesses because all the best teams are built by A players. You want to compensate them accordingly, right? So these are some other market developments, but overall we have a really good sense for this market now. We know it exists. There's a lot of good data to support. All right, this is a problem that exists pretty widely. It's growing at a good rate, and we have validated our problem in our market set at this point, right? So now let's go to the next step, right? We've defined our market. So now let's talk about our positioning. So positioning is pretty simple. It's basically just what are we saying and how are we messaging to the market to for them to understand what it is that we do and the problems that we solve, right? An example that I like to use is the muffin and the cake analogy, right? So a muffin is pretty obviously branded as something you eat in the morning as a breakfast item, and a cake is pretty typical lunch through dinner dessert type, right? What's the actual difference between the two? Maybe one is a little fluffier, one's more dense, but all intents and purposes, they're effectively the same thing. The key difference is just how they're positioned. It would be weird to have a muffin for dessert at dinner, and it'd probably be weird to have a piece of cake for dessert during breakfast or even just as your core breakfast anyway. Not judging you if you like to do that, but it's pretty standard belief across the Western world right now. That's the difference, right? So the example for any other business, right? You could change your positioning, sell the same thing effectively, and have a very different perception from the market. That's the point. So now let's dig into how exactly is positioning themselves. All right, so now I'm just creating a prompt in ChatGPT to help analyze the target market. So the key things that I really want to know are market tier, pricing strategy, sales complexity, and churn drivers. And so now it's just giving me back a prompt that will then use to find out more information about the target company. All right, so now I'm back in Perplexity. Given what you know about exactly in its target market, analyze the following market based on key business factors. And so we have market tier, pricing, complexity, churn drivers. So let's do that. After the prompt is run, we have 34 sources. And in this case, I had it structure as a JSON object. The benefit of using JSON objects with your outputs is it structures your data. So when you are prompting against structured data in a JSON format, it's going to give you a much more consistent output. which I'll talk about in other videos at some point, but let's just take a look and see what we got here. So in terms of the market tier, so they're at the enterprise level. You could be enterprise, you can be mid-market, you can be low cost provider. So in this case, they're going to be enterprise, and they're going to be high ticket enterprise, right? So in terms of their sales complexity, their high complexity, their churn drivers, we'll dig into those in a second. But let's take a look at their tier first. So they're serving companies that are having over 1,000 employees. 65% have over 1,000 million in revenues. So that's pretty substantial. And only 8% are small businesses or less than 50 employees. So they work with companies like IBM, Cognizant, Zendesk, and they target companies with sales teams of 50 plus payees, or further indicating enterprise orientation. Yep. Then in terms of high ticket, they employ a custom sales-led contract-based pricing model. Average price of their contract is $174K, upwards of $1 million, and it includes tiered pricing. Pretty standard enterprise looking model there. In terms of their sales complexity, it's going to be high complexity, right? So the higher up you go in terms of your market positioning, the longer your sales cycle, the more complex the sales cycle is. If you're selling really, really high value deals, it's likely that you're working with more decision makers or more influencers, just more people who are evaluating the actual service or product. The further down you go, the quicker the sales cycle, the less complex the actual sales cycle is in terms of how many people are involved and what needs to actually happen to get that closed. But then also, churn is related to where you are in the market. So if you're at enterprise, you spend so much time to bring the deal, close the deal, get integrated, there's a lower churn risk just by nature of inertia, right? The low end, if you're small business, you're working with smaller customers, they're more likely to switch, go out of business, any number of things. So they'll churn at a higher rate. So just a consideration when you're picking your own market positioning. But anyway, so the churn drivers here, implementation complexity. If they haven't been onboarded properly, they don't demonstrate ROI, leadership changes internally at the company that you're selling into. The product is complex and requires specialized knowledge that the team may or may not have, and the market might be consolidating. All right, so those are all like pretty standard churn drivers for an enterprise business, but this will allow us then to just in general understand our segmentation and how we want to position ourselves. And so the positioning can be used across your market messaging, from your landing page or your website to your content, to your outbound messaging, to your sales calls, to your sales decks. All of this fits in together, and it's important to really be aligned on it. So that's why doing this research up front or consistently refreshing this research and making sure your positioning is correct is super, super important. So now we have a good idea about our positioning. Let's take this and put it into our doc. All right, so now let's talk about competition. So in terms of competition, it's really important to understand exactly who's in your market. And the reason why is because you don't necessarily want to compete against the biggest players, the incumbents, head to head. So what I mean by that is you don't want to have the exact same segmentation and positioning as the big player, because they probably have more social proof than you, they probably have more trust than you, they probably have a greater authority than you. And so as a result, if you're just going head to head on them, they're going to win, right? So you want to find a gap in the market that is underserved and then position yourself accordingly. So now let's do some research on competition so we can continue to dial in the actual positioning. So now we'll prompt it, say, analyze the competition. Understanding your competition allows you to find gaps in the market that will help with your differentiation. Research the biggest players across each market segment to understand where there's opportunity. Answer these questions. Who are the competitors in each of these segments? And where is there an underserved segment? Let's look through the response that we got. So this is a competitive analysis of the sales performance management market. And so let's talk about the enterprise segmentation, right? So in this case, it looks like SAP Commissions holds the largest market share at 28% positioning. So it's going to be the biggest. 28% of the market, that's just over a quarter. That's substantial in terms of, basically setting the industry standard and expectation. It's interesting that this source found another competitor that was also an exactly product, and it has the second position with 11.6% market share. And so this is indicating the fragmented nature of the enterprise segment. So basically, like, this is proving the point, right? One company has multiple products within a similar segment, and the difference is really just the differentiation. So the same company can compete against itself and not eat its entire market share just because it's positioned a little bit differently. So some other competitors include Vericent and Salesforce, Optimize, and this other one, Bcom. So then we talk about mid-market, talk about SMB here too. I'm just going to stick to enterprise for now because that's really where they are most well positioned and the biggest part of their market. So now let's talk about some of the underserved segments and finding gaps in the market, right? So in this case, they're saying the CRM specific solutions are a good place in the market gap. The mid-market scalability gap. We have vertical specific solutions, international markets, better pricing model in terms of it being more transparent. So instead of just saying contact sales for pricing, you can just have it simply on the page. I actually saw a study done like literally this morning that suggested sales processes that share pricing will convert at a greater rate than sales processes that don't share pricing or don't have transparent pricing. All else equal. Interesting data point. This is supporting that. Integration ecosystem partners, and then data-driven compensation strategy. So this is revealing the most significant opportunity lying in the upper mid-market segment. Okay, cool. So they already own a lot of the enterprise segment. There's a good amount of opportunity in the upper mid-market. So like I'm doing all this research here. The caveat that I just want to make sure everyone knows is like, I'm doing this in a video and I'm doing it quickly and I'm not really checking on these sources as deeply as I would. If you're doing this for your own business, like you want to make sure that these numbers are all connecting and everything's jiving, right? You can't just take what this research is without a grain of salt. Very accurate and it's often correct, but again, it's just AI has a tendency to occasionally hallucinate, as I'm sure you've probably experienced in your own trial and error. So just caveat really quickly. So this is some good knowledge here in terms of understanding, all right, well, where's the upper middle market segment and finding gaps there. So, assuming you're in a sales, you're a sales leader and you're tasked with finding uncovering some opportunities, the upper mid market is going to be where we want to play. So what we can do then is just use that as kind of the basis for the rest of this analysis. So what we'll say is, and then we have scalability gap in the mid market, CRM specific solutions. Those are just a couple gaps, which is like interesting, right? So now we have a good sense for our market, the problem we're solving. We understand positioning, what's happening. We understand the competition. Now let's create our value propositions to actually do the market messaging. So, you can basically just back into these based on some of the biggest problems that are typically being faced, right? So let's just go into Perplexity again and say, give me the top 10 pain points faced by the upper mid-market segment. Provide me with 10 value propositions relating to these pain points and their inverse. Okay, so now it's given us the 10 pain points and their respective value propositions, right? So technology and solution scalability challenges. Basically, this is the value proposition. You can build mid-market technology that delivers 80% of the capabilities at 50% of the implementation complexity. We shared this earlier. Talent acquisition, retention struggles. An associated value prop is growth-focused talent programs that leverage your organization's unique advantages in career advancement, financial constraints and capital access, compensation strategy and complexity, data fragmentation, analytics barriers, so on and so forth. All right, so this is like a good amount of data that we can use and start to test our messaging with, right? So what I'll do now is basically just take all this and I'm going to plug it into ChatGPT and say, give me the 10 value propositions and their inverse for based on this data. And then let's give it some more context on like, here's additional context. Okay, so now we have 10 value propositions: purpose-built mid-market technology platform, growth-focused talent programs, strategic financial optimization frameworks, data-driven compensation frameworks. So now I'm just going to say, give it a quick prompt. For the upper mid-market segment, generate 3-sentence outreach messages using the following structure: personalized insight, pain-based value prop, and then a simple direct call to action, less than 80 words. So you can see here the sales and revenue performance management. High growth companies struggle with quota setting and incentive misalignment, leading to missed revenue. Scaling sales teams, optimize compensation and forecasting to drive consistent performance. Would you like to see a case study? Manufacturing and industrial sector. So I noticed recently expanded operations into a new region, which often comes with challenges in scaling operational processes. So you're calling out the problem and you're giving some data, basically some social proof. And then you say, we help companies like case study streamline their process with automation and performance tracking. Would you like to see a case study, solving this pain, right? Financial services recently notched new product, which likely increases the need for real-time analytics and risk monitoring. Research shows that data fragmentation in mid-market leads to 20-30% delay in key decision-making. Helps similar firms unify data sources to improve forecasting and risk management. Would you be able to see a case study on this, right? So this broke it down into like three different target verticals. You would want to prompt this based on the specific vertical that you're going after. You're going to want to massage these prompts, but this is like a pretty good 80% of the way there. That's a great email for a bit of work for a company we knew nothing about just a little bit ago. So that's how you would start the copywriting process. If you're doing cold email, then you can implement this and apply your favorite landing page template, plug in this data, and it'll give you something equally as good, right? So now we know all the stuff, right? We got our market, our problem, our positioning, our competition, and our value prop. And so once you have your value props, it's pretty much what you need, and you can just start sending out. So in order to actually build the list, you'll want to define your ideal customer profile. So, you can do that a bunch of different ways, but usually what you want to do is focus on who are your best customers, where are your case studies, and then just find lookalikes. That's a good place to start. There's a handful of other playbooks that we like to use, but this is just kind of the bread and butter, the standard, easiest to conceptualize and execute on. And so what you want to do is basically go define your ideal customer profile. So let's go back to the perplexity and we'll prompt it up. We'll say, now that you're clear in your market positioning, it's time to find your exact ideal customer profile for the upper mid-market segment. And then we say, all right, your ideal customer profile is the perfect fit buyer persona, the 3% most likely to buy. They will get the most value from your service. They'll stay the longest, the highest lifetime value, easiest to fulfill. This is how you define it. You analyze the current customers. What made the best customers a great fit? What made the worst customers the worst fit? Talk to your existing customers, survey them, or just interview people in your market or your aspirational target market. And here's an example of a handful of different filters. I'll share those in a second once I enter this in, right? We can think about the most basic: employee headcount, location, industry, revenue, funding. More intent focused is what kind of tech they're using. If they have any specific website keywords, like we talked about, if they're sales led, contact sales, like that's an indication that they're a sales led company versus like product led company. So they're going to have different pain points and they're going to be running things a little bit differently depending on that, right? As an example, how is the headcount growing? Are they running ads? Is there new senior leadership in the company? Are they hiring for a role? What's their traffic? What kind of reviews do they have? Perhaps they've just recently been invested in. What are the common themes across those investor base? Or they just released a new product or service, right? Those are some really good intent that'll allow you to target your end customer much more granularly, right? Then we'll have persona level filters. So that's simply job title, how long they've been at the company. If they have any keywords in their LinkedIn, maybe they're following certain companies on LinkedIn or other social media, and they're engaging with niche related influencers, or they visit your website, or they've been to an event. Not an exhaustive list, but this is like going to cover 80% of what you probably will end up needing. And so we'll build lists based on all these different things, but let's just see what we get as our ideal customer profile here. All right, so it's giving us some filtering. So firmographic, 500 to 999, revenue filter of 100 million to a billion, intent signals, actively considering solutions, website keywords related to sales performance or compensation, headcount growth in sales departments, or recently hired senior sales leadership. Like we talked about that. That definitely makes a lot of sense. Your persona level identification. Again, right? You can review customer insights, you can look at recurring patterns, right? So if they're using Salesforce a lot, or they're expanding into new territories, those are good examples. If you want to operationalize this, obviously you want to make sure the marketing, sales, and customer success are all on the same page, right? So what it's telling us, upper mid-market segment is going to be a good place for us to target. So what we can do now, we can take this and then say, give me a list of filtering criteria based on. So we're just asking it to review the analysis of the ICP, and then based on that analysis of the ICP, let's get a list of targeting. And so here we go. Employee headcount, 500 to 999, annual revenues of 100 million to a billion, tech, professional services, manufacturing, financial services, North America, we're expanding into Europe. Series C plus are publicly traded, 50 plus sales reps, Salesforce, HubSpot, maybe they're using Microsoft Dynamics, so they have an existing CRM or an ERP, right? So those are some common firmographic filters. And then in terms of some higher intent filters, if they have a new ERP or CRM, they're expanding their sales, they're hiring for VP of sales ops or revenue ops, post a job, currently running ads. So like all of the things that we just mentioned, and these are all the good job titles. VP of sales, chief revenue officer, SVP of go-to-market strategy. Like, as you can see here, like this is all going to take a little bit of refining, but ultimately, like this is so close to what you need. What you do from here is you take this data, you plug it into Clay, you build your company list, you create some basic prompts to just go and validate some of these assumptions. Like, hey, are they actually growing at a certain rate? Do they actually have that specific keyword on their website, right? Those are very simple ways to validate your account list at scale. Then you want to find those relevant people. You plug in those people into your sending tool. You match it up with the copy that we built based on those value propositions. You launch it out. You start to get the feedback. You start to see what's actually getting positive replies from your prospects. And that's how you start validating your messaging, your positioning, and you actually go to market. So with that, that's the video. I hope you got some value in this one. Quick overview. If you liked it, subscribe. Tell me what you thought in the comments below, or even better yet, book a call. We'll hop on a call, chat about your existing situation, see if I can help. If so, we'll talk about how to actually get started. But from there, hope you had a great day. Thanks for watching the video. I'll chat with you soon. Peace.